Dick's Sporting Goods out with quarterly results earlier this morning. Let's talk about the quarter and the consumer with Michael Lasser. He's UBS equity research analyst. Michael, there's a lot to like here. The company not only beat expectations, but they raised their earnings guidance for the full year, along with their revenue guidance and their comps, too. What did you think? That stock right now actually up by 7.3%.
I think you nailed it, Becky. There's going to be very few retailers this reporting season who have a combination of reporting mid-single-digit comp growth along with raising the guidance for the year. What I think is that Dick's is in a good spot to capitalize what is on increased competition within the athletic footwear and apparel space. It's doing a great job of executing. Now, the stock has had a really nice run over the last year or so. It does trade at a premium to where it has historically. It's going to have a good response today, which is warranted. I think from there, it probably consolidates and waits to see how trends shape up for the consumer and for this space in the second half of the year.
You had said ahead of this report yesterday that you thought they should maintain their guidance just as a way of being cautious. What do you think that they're willing to throw caution to the wind?
Well, a couple things. One, they did exceed the consensus estimate by 30 cents. Now, they raised their full year forecast by a magnitude that was greater than the beat, so they are exhibiting some optimism. What it suggests is, number two, that trends even into the early part of this current quarter are quite good. Now, Becky, I would remain somewhat cautious into the back half of the year. We are going to have what is a very distracting election. There is a shorter holiday shopping period this year, 6 fewer shopping days between Thanksgiving and Christmas. That's going to be a more challenging season for retailers. So despite the increased confidence that Dick's is exhibiting to this morning with its raised guidance, we would offer some cautious view for the second half of the year across the retail sector.
Michael, I was going to ask you if you could read more into the consumer about this. It sounds like despite what Dick's is seeing, you're not buying it anyway?
We have a neutral rating on the stock. Our view is that while Dick's is doing a good job, the stock has reflected that in its increased multiple over the last year. What does this read into the consumer? It says a couple things. One, the fact that Dick's is benefiting from a really good backdrop for certain athletic footwear and apparel, like vendors like On and Hoka. Those are one of very few trends that are happening in the retail space right now. Number two, it says that while the low income is pressured, the low income demographic, other consumer demographics are feeling pretty good. They have jobs. They're willing to spend on the right products at the right time. But that is an isolated occurrence right now in the retail sector. By and large, trends are pretty rough out there.
I'm so sorry. The what consumer? Logan?
The more affluent consumer, the lower income consumer is under some pressure.